I ultimately think this is just the next step in the stock going toward 1,000.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So Tesla reports their Q1 2020 earnings tonight after market close. I'll be streaming the earnings call on this channel, so be sure to stop by and say hi in the live chat. In this video, I'm going to be reacting to some comments from Wedbush Analyst Dan Ives, who's looking at a $1,000 price target on Tesla stock, sharing his thoughts on what he's looking for on the Tesla earnings call. So let's get into the video. And by the way, since I know there's a lot of crypto lovers watching and people who like free stuff, it's your lucky day. For a limited time, you can get up to $250 in free crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. It also helps out the channel. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
Tesla's going to release after the bell today its quarterly results. Analysts will be listening for an update on a lot of things: autopilot, safety issues, increasing competition, and delivery forecasts. But what about the stock? It's gained over 400% over the past 12 months. What is it? What do we need to see to justify that? Dan Ives is managing director at Wedbush Securities. It's an interesting discussion to have, Dan, because what do you have as the multiple? What do you got, 85 times or something? It depends on whether you look ahead or behind, but let's say it is 85 times. So you have to assume that the company is a lot more than just a car company, and that's fine. And you point out, Apple didn't just make, they changed from just a computer company to what they are today, so that's possible. But what is the most important thing to hear tonight? Is it projected deliveries? And you think they could blow that out or forecast 900K or something? What do you think is likely?
Yeah, I think ultimately that's the key. It's really delivery guidance for 2021. Before line the same was 800,000. And now, despite all the skeptics, competition, chip shortage issues, I believe we could now be starting to go toward 900,000.
This is a very valid point from Dan Ives. If, and that's a big if Tesla were to update delivery guidance for the full year 2021, this would be extremely positive because Wall Street is dramatically underestimating what Tesla's aiming for. I don't understand how these clowns are so far off the mark, but that is besides the point. If Tesla reiterates, updates, or clarifies guidance, this will probably be bullish, but I really don't think they are. I think Tesla's going to be much more comfortable to just sit back and say, look, we expect over the next decade well in excess of 50% annual rate of growth, compounded on average. This year might be 80, might be 20, might be whatever, but on average about 50%. If you want more clarification than that, go fuck yourselves, because we're busy building so many factories we can't possibly estimate exactly how many vehicles per year with any more detail. Sorry, we're growing too fast. This is a point I really want to emphasize. Tesla is literally growing too fast to accurately estimate how many vehicles they're going to be delivering in a single year. They've got 2 factories currently under construction, 2 more currently expanding / increasing their production capacity. If 1 or 2 of these factories currently under construction is a couple of months early or a couple of months late, that could push into the next year or the previous year and make a difference of 50,000, 100,000 plus deliveries. So my point really stands. Tesla's growing way too fast to accurately estimate how many exact vehicles they're going to deliver in a single year. Much easier instead to estimate the compound annual rate of growth over a multi-year period, which is what Tesla's doing. Wall Street aren't going to like it because they'll have to think a little bit too much to figure out how many deliveries Tesla will actually do this year. But hey, that can create advantage for smart investors who look at their numbers, look at the factories, look at how quickly they're ramping, infer a little bit, and realize Wall Street have no idea and they're massively underestimating Tesla once again. And once again, for the record, here are my delivery estimates of the full year 2021 for Tesla. This is my bear case, as in absolutely everything goes wrong. Austin and Berlin are much later to ramp than expected. Tesla's still delivering 939,000 vehicles. In my bull case for production, if everything goes right, which look, I don't expect everything's going to go right, the actual deliveries this year is probably going to be halfway between these two, but my bull case scenario, I've got 1.1 million vehicles being delivered in total for the full year. I think probably realistically, Tesla's close to about 1 million, but as I said, everything goes wrong, closer to 950,000, and if everything goes right, closer to 1.1 million units, and I know that sounds absurd compared to where Wall Street's at. As I said, in my opinion, this is opportunity. Wall Street has no idea what's going on there. I mean, honestly, Wall Street is expecting like 0 deliveries from Berlin and Austin in this year. How are you expecting that? Like, look at the factories, look at the aerial footage, look how fast they're progressing. Tesla's aiming for Berlin production in Q3 and Austin production in Q4. Based on my estimations, I don't know this for absolute certain, but my expectation is that Berlin begins ramping second half of this year, probably deliveries initially in the fourth quarter of this year from Berlin. Maybe Austin deliveries begin late in Q4 or perhaps early into Q1 in 2022. But in either case, Wall Street is like, yeah, we can ignore Berlin and Austin. It's not like they'll build that factory as fast as they built Shanghai. Oh, wait.
If that ultimately comes out tonight in terms of some sort of goalpost, I ultimately think this is just the next step in the stock going toward 1,000.
So Dan Ives and I are on the same page, both believing that $1,000 per share for Tesla stock is just a matter of time.
Because, and you point out all the points, it's a green tidal wave. 3% automobiles or EV today. We believe China, that's the linchpin of their success, and I think that's what's really going to come out tonight. That's the focus for the bulls.
And you think the EV tax credit, the ceiling actually, instead of weaning us from that, we're going to continue just to feed it. And you think it could go to 10,000 from they need it, right? You couldn't do it without it, from 7,500, right?
Well, that's the one thing. You take a step back as part of the Biden infrastructure plan and all the green energy and initiatives. It all comes down to EVs. And that's 30% of emissions comes from transportation. 7,500 is the EV credit today. We believe that gets up to 10,000, which is key about incentivizing consumers. But the big one for Tesla and GM right now have a ceiling. 200,000 was the ceiling. They've hit it. So you don't get those tax credits. We believe as this goes through the hill, that gets removed. Tax credit gets restored.
I've heard rumors circling about this EV tax credit being reinstated with no cap per automotive manufacturer at $10,000 now, circling for a few weeks, maybe even a few months. It'll be great if it happened. Not necessary whatsoever to help Tesla. As I mentioned, they sell every vehicle they make. They don't need them to be cheaper. They already have more demand than they can meet at current prices. So if this $10,000 tax credit becomes available again for people, consumers buying a Tesla vehicle, I think it's going to force Tesla to raise their prices, at least somewhat, because there's no point selling your vehicle at a current price if you're already selling every single vehicle and consumers getting them for $10,000 less than they were willing to pay. Maybe Tesla can increase the price $5,000, then effectively it's $5,000 off where we are today. I don't know what's going to happen, but in my opinion, if there's a $10,000 incentive, rebate, tax credit, whatever you want to call it, for people buying Teslas today, I don't see any other option but Tesla raising prices, at least temporarily, because otherwise they're just throwing money away. They can take that money to drive the cost of their vehicles down even further, invest in R&D, blah, blah, blah. It makes total sense. What do you guys think? Let me know in the comments below. If this $10,000 tax credit is reinstated, do you think Tesla at some point will lift the prices on their vehicles to somewhat compensate?
And it's important because we talk about the green tidal wave. The U.S. has lagged significantly. That starts to come in along with Europe and China. I mean, then you really start to see the success hit not just Tesla, but the overall EV ecosystem, which we view as a $5 trillion market next decade.
I mean, I want to talk quickly about Plaid because the S-Plaid, under 2 seconds, 0 to 60. That gets my attention, but I don't know if I wanted. When would you do that? Where and when and why and how do you do that safely? How do you go 0 to 60 in less than 2 seconds? And why would you even want to?
Yeah, and obviously those are eye-popping numbers. And for Tesla, the success continues to be not just Model 3, Model Y, and others, but I think what you're seeing on this is just the technology that continues to come out of Fremont and Giga that's really changed the industry. But they have to continue to make sure that they're courting all their customers, even though the masses continue to be focused on Model 3Y and, of course, the drumroll, the Cybertruck.
Yeah, I think about that, and I mean, I'm attracted to it, but then I'm thinking, I don't know if I want to be able to do that. I just don't know if I really want. That's just, with great power comes great responsibility. A very famous philosopher once said that. What about what do we worry about in terms of self-driving? And that's what gets the headlines.
Yeah,
Autopilot.
That'll come up tonight. I mean, clearly in terms of Q&A. But I think for Musk, I mean, obviously they're going to have to limit what they could talk about, given it's a pending investigation. But I think they've talked about the safety records. And if you look at Autopilot and what we've seen with the FSD, that's something that's going to continue to get pushed out in terms of from a regulatory perspective. But I think Musk has talked about it. I mean, this is really something that they, from a safety perspective, they're going to have to continue to focus on. Obviously, bright spotlight. But right now, if you look, I mean, their track record has kind of spoken for themselves, even though some of these tragic issues.
I really hope Tesla doesn't waste any time on this earnings call attempting to counter some of the recent so-called safety-related FUD. We all know it's a load of horseshit. We all know that Tesla makes the 3 safest vehicles ever tested with the lowest probability of injury, period. So I hope Tesla doesn't waste any breath on this. Maybe they do, but it'll be a total waste of time. Won't give us investors any new, novel, or useful information for making more informed investing decisions. We already know that they've got the safest vehicles, and we know this is just media FUD. And just finally, before we wrap up, I just want to reiterate a prediction I made a few weeks ago, and that is this. I believe that this quarter, Tesla is going to smash practically every record ever. Revenue, profitability, cash on hand, etc. And in Q2, they're going to do the same thing. And again in Q3. And again in Q4, and again in Q1 2022, and you get the point, right? And I don't think Wall Street's expecting this. I'm not sure how they're not expecting this, given the fact that Tesla's scaling at an insane rate, but hey, at this point in time, most analysts still completely asleep. I don't think that this earnings call is going to give analysts a huge amount of clarity. I don't expect Tesla to give clear guidance for the year. They might reiterate what they've already said. I don't expect Tesla's going to give us exact timing on Berlin and Austin, etc. I think they'll be a little bit coy and also a little bit reserved. Maybe Elon and folks on the earnings call might suggest that maybe there'll be some production from Berlin late this year maybe, and maybe something from Austin late this year. That's probably the best we're going to get, even if Tesla personally are internally aiming for Q3 deliveries in Berlin and Q4 deliveries sometime from Austin. I don't think they're going to be that clear. I think they'd rather underpromise and overdeliver. So let me know in the comments below, what are your predictions for Tesla's earnings? What are your guesses for profitability, cash on hand, total revenue, etc.? And don't forget, I'll be streaming the earnings call tonight live. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like up to $250 in free crypto bonuses with BlockFi, use the link in the description. You can also get 2 free stocks with WeBull and a free stock with Stake, also linked in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.